And good afternoon. This is the Elliott Wave weekly update for gold, silver, and platinum being recorded on Saturday, August the 9th at 12:20 p.m. Pacific Daylight Time. I'm going to start here on the gold futures, and I have my largest picture that is available to me, and that is my maximum monthly chart. This data goes back to 1975. Obviously, I know that there's plenty of data prior to 1975, but that's what I have. And so that's what I'm showing. And with that in mind, I am using it to say that we're in a cycle third wave going up. Cycle one completed at the 1980 high, which at the time was $850. And then cycle wave two completed at the low in 1999, which was $253.20. That was quite the low, by the way. Um, and then what we have is a cycle third wave. What's going to be inside that cycle third wave? 5 waves of primary degree, of which only 1 and 2 are complete. So we're inside primary wave 3 of cycle wave 3. Then what's inside primary wave 3? 5 waves of intermediate degree, of which only 1 and 2 are complete. So we're in intermediate wave 3 of primary wave 3 of cycle wave 3. So it's a 3 of 3 of 3 move. Very powerful to the upside. What's inside this intermediate wave 3? 5 waves of minor degree, of which only 1 and 2 are complete. So you can see that this is a market, in my opinion, which is building for an explosive continued rally to the upside. Now, I got to say that from the start of cycle wave 3, which was 253, we broke back above 35,000 on Friday. Pretty strong, very, very strong. And in fact, we've really kicked in since December of 2022. Let me just make sure. In November of 2022. And actually, that low was October of 2022. So many things bottomed in October of 2022. In this case, that's where minor wave 3 began. So let me start bringing this down. We can start to take it apart and look on the inside. This is the 5-year weekly chart. So again, we're showing minor wave 3, and inside that there's going to be 5 waves of minute degree, of which 1 and 2 are complete. But I think we're getting very close to putting in the finishing touches on that minute wave 3. What's inside minute wave 3? 5 waves of minuet degree, of which 1, 2, 3, and 4 are done. Now, this is where I made a slight change from last week. Last week, I think I was putting the third wave here, the fourth of the minuet degree, fourth wave here, looking at that this was all the fifth. I've now moved that and put us into that minuet wave 5 versus a sub minuet, looking for these all to be completing much higher. It cleans up a lot of the what I would call the small part noise, and I think just cleans up the count a little bit as well. So again, 1, 2, 3 on the minuet degree, still a triangle pattern that we thrusted up and out of finally last week. And I'm labeling that as the first wave of this minuet wave 5 up. And once minuet wave 5 is complete, that'll then complete the minute third wave. So now let's bring it down again. I'm going to look at the daily chart. And so we're going to start to build our levels for where we think this all can finish up. So I think that we might be inside of a small wave 2. And if that's the case, let me see if I can bring it down to the hourly and draw us even. Yeah, I can clean this up quite a bit. 1, 2, 3, 4, 5. Yeah. So we go from this low and we put in just some fibs. So there's the fibs that go, and you see we already dropped back to 382 for this is a wave 2, and that could be A, B, and then 1, 2, 3, 4, maybe a slight new low below 34.43, but I think that we're very close to finishing wave 2. Certainly we've met the minimum, which is 0.382, and that was hit on Friday, and then we bounced up off of that into the close. Next one down will be 34.16, but in between, we do have some support from the hourly 200 at 34.23. So I think that there's enough underlying strength in gold, and with the tariffs that the United States is putting on, basically trying to harm or just to kick Switzerland into gear. But I think it's really going to be applicable to anybody in bringing gold into the country. There will be a high tariff to pay on top of just moving gold. So it just becomes yeah, it's interesting because that's what produced that spike up to 35.33. So it gave us that new high. Now, could that on its own have completed? Let me go back out to the daily that we're looking for that completion point. One, two, three, four, five. It actually could. But here's where I have for minute wave three. I've got it up at 36.65. This got to 35.33, so it did go to a new high above what we saw back in April at 35.09, and then that started all of this sideways activity, and it turns into a triangle. And so I would look for a little bit more, which is why I'm thinking wave one. But if we start to come down and I have to put the three there, then again, taking it back out to that weekly, we'd be looking for, I'd be running it, if it is, I'd run it from here to that high, and we definitely would be looking for a much stronger decline, a corrective period. Now, I'm not necessarily looking for that right now. I think there's a lot of underlying strength, and I think that there are many factors that go into that as to why investors, large firms, just the people in general are going to be looking to hold gold over the long term. And it's still just basically, it's a storehouse of value. It always has been. I think it always will be. There's still a lot of central banks that are accumulating gold. There's still a lot going on with the dollar. And there's a whole bunch of conversations behind what's up with the dollar. But in my own analysis, which I think I might be presenting a little bit later today, I continue to look for the dollar to decline against its, the basket in the dollar index. I'm looking for lower prices. In fact, I'm looking for a move down to about 95 right now. So I think we could kick into the downside as far as the dollar. And there are many things that can interrupt that. I mean, that could create that and interrupt any rally attempts here in the dollar. Um, yeah, I got to leave it there because they're just too vast to kind of go over. But we have a lot of different things going on economically. And so we continue to see bond yields tick higher versus lower. Now we do have some that are coming in a little bit lower, but they did a 30-year and a 10-year note auction, and both kind of came in closer to 5% than 4%. So, but that kind of just reverts, and then always looking for a reversion here from the shorter term being low, and the shorter term rates being high and the long term rates being low. So that's an inversion, and we're looking for that to kind of come back to where you're going to get more in your 30-year than you would in a 1-year T-bill. So which is more in line with the Fed funds. So again, a lot of stuff happening in that realm. So does it have an effect on gold? The actual dollar does. So when the dollar sinks, gold will rally because of how it's valued then via the yen, via the Chinese currency, via the euro. And so, gold will usually rally. Gold did have a fairly decent rally on Friday, and then it pulled all the way back, still finishing higher on the day. So I just think that it's a 1-2. So I'm going to bring it all the way back down to the daily chart so we can see it. There's a 1. We still have the possibility. I don't need to leave that out there right now. Let's go put that in. 236, 382, and 50%, I think, should take care of that. Right, so we'd be looking for what could be left. 382 was met here. It could be a wave 2, or we can come down again, 34.18, put a wave 2, and then start that rally again. Now, we've got other stuff coming into play in terms of geopolitical. So we also know that gold abhors uncertainty. And if there's uncertainty on a global political basis, a geopolitical basis, that we have threats, which I think we do, because there's still a lot of things going on in the Middle East. There's still a lot of things going on in the Ukraine, even though that the U.S. is going to try to broker a ceasefire, at least in the Ukraine. We're going to see how that goes. So there's a lot of things that could really affect the price of gold, plus just the economy, economically, dollar-wise. A lot of things that could really push this higher, and I'm looking for that actually. So I'm going to allow for a little bit more in terms of a correction, and I do not discount the fact that it might, that high, because it is a new high, could have completed minute wave 3, going back out again to that daily. It could have completed minute, well, I got to go further. Here, yeah, could have finished this third wave. And if that's the case, then I got to run the fibs, just the retracements from the bottom of wave 2 to the top of wave 3. And so we'd really be looking for at least a pullback to this, 32.90, down to the possibility of 31, down to the possibility of 3,000. And those, I think that yes, from current levels would seem like a pretty large correction. But in terms of staying above 3,000, I think that might be a pretty good floor for gold right now. I think there'd be a lot of interest if gold came down on the buy side. So I still remain, in terms of my count, looking for everything to kind of start. So if we get a wave 3, we get a 4, then we get a 5, then we have the minor wave 3, we get another 4 and a 5, and we have the intermediate wave 3. I got to go all the way out here. An intermediate wave 3, then you get a 4 and a 5 for this cycle. Excuse me, the primary wave 3, and then you get a 4 and a 5, and then you're finishing cycle wave 3. And that's when you get the much, much larger decline. But by then, hopefully, the world is through a lot of things that are troubling right now. So again, I think we have a lot of rally left within gold. And I know, so initially, you're going to see we start to stack up a lot of resistance. So as we continue to move higher, like next stronger resistance really is like 33,650. And then I have 38.75. And then you've got 39.88 to 4,018. Then you got a big, huge cluster. Once we're above 4,000, there's just cluster after cluster all the way up. Doesn't mean that they're going to get stuck. Doesn't mean that it's going to drop back, because all of them can be taken out. Depends on what's happening and depends on what's fueling it. So again, I don't know. That crystal ball I don't have, but I do have fibs and I do have a wave count. And you can already see that this is very vertical. This is the monthly max, and you can see the vertical nature of what we're doing right now. And that is a 3 of 3 of 3 of 3 move, moving higher. So on the minute degree, if I get that wave 3 in, then that part is done a 4 and a 5, and then this next part is done a 4 and a 5, and the next part is done. So, but it should still continue to look fairly vertical. I would say up to when we finish up intermediate wave 3, which by the way can sit up here at 4,300. So it's basically $900 from where we are to get up to this level. So a lot of potential. And again, people are always going to say, well, what's going to push it up there? It's like, well, I wish I could say, well, my crystal ball tells me A, B, and C. I think the factors are out there. It's just going to depend how severe they're going to be. And then what can come in to really just kick the market back down again. It's actually going to be the perception of the market, the perception of other traders, what they feel that's going to happen. If we start to get cheaper interest rates, that normally in the past has produced lower prices in gold. Because usually it's stabilizing an economy and other things. But in the past, when we've gone into lower interest rates, it was on the basis that what came before was a severe downturn in the market, in the equity markets. So again, and there was economically a necessity to bail out corporations, bail out the public, as we saw in the pandemic, as we saw after the great financial collapse of 2009. So you can go back and you can look at those back here. This is October of 2008. This was up to 2011. So this included lower interest rates, massive lower interest rates, and recovery, and gold soared. And then this took us back down to 2015. And you'd have to go back and look what was going on there. We were still in the equity markets, we were still probably doing really well. And then here is the pandemic, I believe. Nope, that's 2022. Here's the pandemic. Nope, where's that pandemic? Very difficult. There's the pandemic low. But the market rallied. So again, depending on what it is, depends on what the market's going to do or what else is happening. But and I also think it's the power of Elliott. If my counts are correct, a 1, 2, 1, 2, 1, 2, 1, 2, we're getting ready to do 3, 4, 5, 3, 4, 5, 3, 4, 5s all the way up. And then that's why you start to see it stack up. This is the cycle degree. This is the minor degree. This is the intermediate degree. This is the primary degree. And those numbers can grow. They can grow. The intermediate degree, yep, we're up to this level because if I put 1.618, it's probably already been taken out. So let me just see here. Let me put 1.882 and these two. You're going to see where they are. Look where they are. We've already gone through them. So it lifts it to this next level. It doesn't mean that that's where it has to go. It just means we're just looking for 5. So we're looking for the 5s to get us up into those areas. And that's what's happening now. I'm going to edit those, take those back down. And that's our next level on an intermediate degree. But we have the minor degree to finish. We have the minute degree to finish. And that's what we're looking at right now. Bringing it back down to our 5-year weekly. With 3.882 on the minute degree comes in at 36. Let's just say 36.60. We're not that far away. So we can get up there and then we meet that. These then come down. We go through a 4, we mark that, and now we have the next level. Because now I can go 1 over to the 4, and now we got where the 5 is going to come in. And then that's going to complete this third. And then we have those markers up here. So there's a lot of things that we're going to be able to do, and we're going to be adding to it as the market continues to rally. But right now, my point is it's like, according to my work, we are still have some very strong upside to do in gold and actually in the precious metals. So everything is still in alignment. I got all the moving averages still looking good. That's on the weekly. Let me look at the daily, and let's just take a look at our moving averages. There they are, all in alignment to continue to go up. So that's a daily. Not bad. I can break it down to the hourly and just take a look, and you're going to see, well, yeah, the 8 came down because we had a pretty strong downside and turning lower. But as soon as that gets above there, it's back in alignment to go up. So it's not damaging a whole lot. All right, so let me put that back out to my maximum monthly. Let's go over and take a look at silver, which actually also looks pretty good. In fact, I'm being a little bit concerned. It might be, excuse me, conservative with my count. So again, just looking here, I have an ABC and I'm putting a W there, and then an X, and this is a Y. And so that's what I think is in motion, but that's a primary degree. Again, the degree is not so much as of importance here as the actual labeling. And I felt that this really was an A, a B, and a C. Now, I don't have data that takes me back before 1970. Obviously, silver traded before 1970, but we're looking at there that the prices likely were being held lower because of the Brent, just fixed price for silver and gold until 1973, where we got Bretton Woods, and then we got that little spike up. And then we had that massive spike up as if you were around at the time, this is supposedly the Hunt brothers are trying to capture and corner the market in silver. And they got caught. And it kind of cleaned them out. So then from there, we went all the way back down to $3.83 in 1992. And then we started all over again. Now this is 2011. In 2011, they really were expecting that we would get it over 50. They got to 49.82. They got within 18 cents of equaling that high. That, in the terms of the size that it did, it equaled the high. So A, B, C, one big flat. And if you really look at it, it's a W. Down, up. It's a big W. And not a bowl, but it looks like a W. If this was a little bit higher, it would be cleaner. So there, and then we get an X wave coming down, which is just an ABC down, marking it with an X, and the Y, because that's what it's going to look like. There's the cup, and now we're moving up in the stem. And which does suggest that silver, which it's now doing, needed to just kind of start to really move with some intensity. Now, bringing it down to the 5-year, I've constantly looked at this because it becomes very difficult to actually count this. But I'm looking at it as kind of a diagonal going up, but I may drop the degree here because I do think that silver has potential, has a lot of potential to get itself above 50 again, get itself to new all-time highs, all-time highs. And it could do it in this period of time, in this particular move. I don't discount. But in order for that to kind of come in, if I'm counting an intermediate degree C wave up, it's going to consist of 5 waves of minor degree, of which we're in minor 5. Now, leaving that in and of itself, it's usually within the 5th wave that in the precious metals, particularly gold and silver, where we see that expansive vertical lift in price. It's usually in the 5th wave that it just really surges in one direction or the other, where that fifth, where it's the direction of the wave. In this case, the wave is up. So I think of just breaking this down, that I'm thinking that, okay, this is the weekly. If anything, I got to move this down to minute. And that would leave it open. This would kind of suggest that what we're doing is just finishing a minor wave 1, which would just really say something that I don't necessarily see, that silver could be through the roof. If we're thinking that the high right now is $50, that was the high in 1980, that was the high in 2011, basically $50. So anything above here, we're in new high territory. But notice that this is for the C wave. It's 51. It's a new all-time high. But if we get up to there and it finishes it to this level, which means we finish a minor 5th wave up into here, then it's all going to fit. And I'll mark it as such. Right now, though, I'm going to bring it all the way down. Let's take it down to the daily. And here we have the 3 and the 4. So let's look at this minor 5, which is going to consist of 5 waves of minute degree, of which 1 and 2 are done. And now what I have is minuet. This is the third wave. Minute third wave, minuet 1, minuet 2, minuet 3, minuet 4. And now we started to rally, and we put in some decent rallies last week. A little bit of downside on Friday because it was an expiration, options expiration, and I saw SLV and GLD kind of hitting the skids because I think they were making adjustments to positions for expiration. So I'm kind of going to look for that rally to pick up again. Now, where are we? Well, right here, wave 5 is equal to wave 1, but I'm looking for it to get above that high. So 100, only a pause, and that's exactly what it did. The market paused, came back, closed right at it. Not a bad thing. So I'm looking for it to get at least to 39.95, which is going to take us up to new highs by 4 cents. So I'm actually thinking if we can get a surge going, we start to break off the top of this, it's going to change the dynamic of the diagonal, but I'm looking for 42. Now, 42 could complete minute wave 3. Notice we have 1.618. Now here again, if I put my lower levels in like 100%, right, equality, where wave 3 would be equal to wave 1, well, I'm always going to look for more because basic Elliott tells me wave 3 should not be the shortest wave ever. That's the rule. Out of 1, 3, and 5, wave 3 can't be the shortest wave. So I'd like to get a little bit more than 100% so that I don't have that threat in my count. Now, that's just me. Sometimes you get it, sometimes you don't. If you don't, then you got to look for what you're doing to see if there's something else going on. But in most cases, I get it, and that confirms the third. Now, here, it's going to come in below, but still above that 100%. And let me just show you where that was. Way down here. So we're above where minute wave 3 would be equal to minute wave 1. So we're already into that territory that now I'm just looking for it to get above the minuet third wave, and 39.95 or 40 would do the trick. And that would put this minute third wave could be complete. So we're looking to where this can be complete. 100, not going to work. The 1.618 could. 2.618 would be beautiful. That would be the surge that I'm looking for inside this fifth wave, which normally fifth waves, we're looking for it to cruise. And here, same deal. So it's the fifth wave, not necessarily the fifth wave of minor degree or higher. It's the fifth wave. And now we're in that fifth wave. I'm looking for it to surge. Give me a little vertical nature here, and that would fit perfectly, get us up to complete the 5, complete the 3, and then we're set for another swing lower, but you see the swings they'll still be dramatic, but they will line up with our higher levels. So if I'm looking for this to kind of come down, then the first line of defense for a minute fourth wave would be the minuet fourth wave. And there's that box right into here. We just finished it. We just did it. So if we get up to 42, it still could drop down to 36. And then we go up again, right? And a minute wave 5, and again, looking for that expansive, looking for that, where are we going to come in here? 44 or higher. If I'm looking for this, then we've got to start getting up into the levels. There's 2.618 for the minute. That would be wild. But it could. I can't say that it wouldn't. Silver has been interesting and also surprising. And both sides. Just suddenly like, whoa, get out of the way. And then suddenly just like, no, get in the way. We're going to take everything out going up. And I think that's what's going to happen. There's others that also see it. We have algorithms that are kind of spitting out and looking for the same thing, for an additional surge up, for new highs. I've got some where they're talking about silver being above, well above $50 an ounce, like 55, 60, up, way up there. I'm like, well, I don't necessarily see that, but I can't say that it can't happen. Depends what's happening on geopolitical, what's happening in our world, what's happening in terms of the supply of silver and the demand. So there are a lot of things that will go into this. But right now, I'm hoping that, well, we're going to hold our levels here and not necessarily drift back towards 36, but continue maybe a little bit more in terms of just putting in. Let me go all the way down. Let me go to the hourly chart. See, we got that 0.382, but I think I can put, if we got 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5. That's weird. 3, 4, 5, 4, 5. I could take it from there to here, but I still think I really want it to hold like basically here, or if it had to, 37. If we're going to drop from here, I'd like to see 37 hold before it goes up and finishes this minuet wave 5 and then minute wave 3. So the recovery was good, but the corrections can be deep. We'll see what happens. Again, on the little bit longer term charts like the daily, we are basically got the 8 gone back above, so we are just cruising back again into being in alignment to go up after we had that bigger swing lower, but it stuck to a 3-wave decline. That was the beauty of it. It was deep, but it stuck to a 3-wave decline. So I'd be looking for that level to contain the next, depending how high we get, I would look for it to contain the next 4th wave down. All right, let's go take a look at platinum, which also has been extremely interesting. And let me go all the way out so we can just take a look. Let me look at that maximum chart. And basically, we are in, this is the primary A. I'm looking for primary wave B up. Being that this was an ABC, leaves us open to also be a flat. I have not seen an irregular in this market or in other precious metals. Doesn't say they can't happen, but it's not something I'm going to necessarily be looking for because that would be above 2,300. And I'm not looking for that, but you're going to see where we do have our cluster. So we have the A, we have the B. The B wave was that dynamic triangle pattern, which actually this started in 2021, and this one finished in 2025. So 4 years for that B wave. 4 years for that B wave. The A wave took from 20 to 21, took a year. So here we are here in the C wave that began in April of 2025, and we've already reached by July of 2025 quite a big. So we've already exceeded that high. We're in line to say, well, we could have a C wave and then we're done. But if I had to measure it, there is 0.618 on the primary. Because if I get an ABC and I put the C there, that's primary wave B, and I'd be looking for that as a minimum. 786, and there's the flat. So there's A, ABC, 618 minimum, and that is 16,041. And our high thus far has been 1,511. So I think we have, in terms of where we are, let me bring this down. Let's stick it on the 3-year. We're inside. So now we have 1, 2, 3, 4. And this is to, this side is for that 4. I put the 4 in place because of the decent rally that it produced up and out of there. But that's kind of getting caught up on itself right now. So I am leaving open the potential. Now let me just bring this down one more and bring it down to the daily. Now we can look inside. So you can see this actually looks like 5 to me, and this looks like 3 to me. So I think we still can do another slide lower in platinum and maybe get back to 1230, 1231, or possibly even a little bit lower. A fourth wave, I wouldn't want it to go below 50%. Now, because this just, got caught twice, you get a decent rally and it doesn't fail. And so it kind of looks like an ABC. And then we're going to come back down in 5, maybe contain it to here. If it drops below that level, we have price support at 1200, and a break there drops price support to 1100. And I'm just not looking for that deep because I don't think a wave 4 should go that deep in this structure. So there's other scenarios where it could be that we did finish it all. We finished wave C up here. And just kind of failing to get all the way up there, but still ABC, and we're just going to have a stronger decline now. And what we look at, let me go back to that monthly, what we look at is we have an ABC and then primary B, and we're looking for a stronger decline now. Boy, it could really be devastating. We'd have to run it from there and up to where that B wave is. And then we're looking for something much, much lower. And then somebody had mentioned, oh, we're looking for 365. It's like, that would be the fib level, but that's not what I'm looking for. I got to go by what the market is telling me that is happening here. And accordingly, how it starts to present itself. So to say that, like, because I know how they did it, and I just actually haven't answered them. So let's just add, go down to that level, we go up. If this finished it, 618 is 432 to 100 is negative. So no, I'd be looking for it to come below there. That's 432. And could it? Well, of course, anything can do, what a fib is telling you. But do I think it's going to happen now? It's like that part I don't see. I still think the platinum has some upside to finish and stays within these boundaries here, and that we start to get, for this primary degree, we start to get to those fibs. 618, pretty good. 786 is pretty good. Up here would be total flat. But here, pretty much a flat. There would also be a flat. But look at those levels. We're talking 1600 and change, 1900 and change. Those are pretty, platinum hasn't seen those in a while. I mean, here we touched it in this B wave, and that was back in 2011. So we can get up there 14 years later. Very possible. All right, so again, let's just think on a smaller time frame, what are we looking at? The possibility that we have one more leg down before this minor fourth wave is complete. It's going to readjust those fibs, so which we can do, and we're going to pull this down. And these go along with this is the retracement levels, these levels. This would be pulled lower, and that affects these levels for that 5. So, and that's what we have for wave 5, getting us up into there. I'd like to see this just really continue and not come down, because look at these. We have such a nice cluster for intermediate, for primary, and for the minor. And I'd like, it's so clean to get up into here and finish the C wave, the wave 5, the C wave, and the primary B wave would be ideal in terms of Elliott. So that's kind of what I still have in mind. But again, being a fifth wave, we could surpass it, get ourselves up even higher. And we got some room. All right, that's going to be it. I'm going to get this posted. The next update will be next week.